Hello, my friends. Brett Pattison coming at you from the financial capital of the West, the land bountiful. It is April 14th, the year of our Lord 2026. Hope everyone's doing well. We got the whole gang here together. Spencer decided to come home, grace us with his presence on the podcast, which we are grateful for. Spencer, in 13 seconds or less, how was the European journey?
Memorable. Food was great. People were wonderful. Weather turned out. The kids were amazing. And when I say the kids, my kids, they had great attitudes. It was good to go back home.
Love it. Spencer played basketball, if anybody didn't know, in Europe for what, 10 years?
10 years.
10 years, and took a trip back to revisit.
Show my boys where they were born.
There you go.
They weren't as excited about the pictures as I was to take a picture in front of the hospital and in Italy and Vienna and stuff.
I have no idea.
But they went along with it, and it was good.
Yeah, they're like, okay, Dad. Okay, old man. This is great.
Exactly.
Well, great to have you back, Spencer. Joined with the chairman and Mike. As always, good to see you guys.
Good to be here.
We have 3 great topics for the day, really 2.5 great topics, because the first half of the topic we always discuss, which is the market. So let's talk about the market. I'm going to actually share a chart as we talk about the market, and we're going to look at where we are right now. Folks, we are now positive on the year. The NASDAQ is up 1.95%. The S&P 500 is 1.61%. Again, this is being recorded on April 14th. April 15th, we might be negative on the year. But as of today, we are positive. That's quite a rebound. We were as low as minus 11% from its all-time high on the 11.5% on the NASDAQ and about 9.5% on the S&P. So what changed, Brian, in the last week? That's a hard question.
That is a hard question. I think there's some optimism about the war, maybe ending the war. I think we're not lobbing missiles into Iran, and Iran's not lobbing missiles all over. And currently. I think the market is currently, but I think the market is responding to that. Yeah.
That's a better answer than mine. I was just going to say there's more buyers than sellers right now. So well done. If we look at trailing 12 months, Spencer, these are insane returns. Trailing 12 months, the NASDAQ's up 37.83% over the last year. S&P 29.77%. So it's been a good year. What happened a year ago right now?
Well, it's always in line with spring break in Logan. Donald decides to do some stuff around that time. No, it was a year ago, and you think about what's taken place over that period of time, but it really was right around a year ago that the Liberation Day, the tariff announcement in the Rose Garden, with all those different numbers that the market wasn't expecting, and man, talk about 3 or 4 days of craziness. And so those numbers, I mean, the last 12 months, that was right at the bottom, right? In terms of last April when the market just sunk. I think S&P was down 17% in like 3 days or something like that. NASDAQ was down more. But since then, obviously, that was a good time to buy. History shows us that the market has come back significantly from that point, and it's been a phenomenal 12 months.
So here's the thing about drawdowns from last year and the recent drawdown, which we're going to dive into a little bit more. From a macro perspective, I'm going to give everybody Iron Gate's macro take. Did you guys know we had a macro take?
Yeah. First time I've heard that.
I'm really excited. We talk macro a lot. We talk about the macro, but I've never heard we have a take. And knowing you and what you think about the macro, I'm so excited to hear.
So if anybody's wondering, I put a macro take. Like that's what an economist would come out and say. Oh, these things are strong. We expect this type of growth. The S&P should be up this amount, right? Something like that. These areas of the globe are strong. These areas are weak. So we need to invest here and there. Right, that's kind of the macro take. Mike, is that a good definition?
Sure.
Terrible definition.
Yeah.
Okay.
Better than some I've heard.
Here's the best macro take, and I feel like this would be a Munger quote that he didn't say, which is my favorite type of Munger quote.
We've heard that before.
Yeah. The macro take of Irongate is we have no macro take, and macro takes are dumb. How's that?
That sounds like Charlie Munger. Yeah.
That sounds like Charlie Munger. That sounds very Brett Pattison. I don't know why you got to quote Charlie. Just quote yourself. I mean, that is 100%. I'll be talking about stuff around the world, and you'll be like, "You're an idiot. You're an idiot."
I'm not to that level of Munger. I gotta bring him in still. Rest in peace, Charlie. So here's what we do. Here is our take. I would say when the market draws down like it did last year at this time. And geez, the past month and a half, 2 months, where we saw a 10% decline. Here's what we love. We love opportunities like this. I'm going to scroll down and I'll continue this take, but I want to bring in a chart to help with it. We are looking at the forward price to earnings ratio on information technology. So just think technology stocks, right? AI stocks. Technology compared to the S&P 500. And if you're looking at this chart, the green is information technology and the S&P 500 is this gold/orange line. And they're both sitting around 19 and 20. But if you look at the forward PE of information technology, it's at the same levels that it was during the 2022, I'm going to say recession / bear market. And COVID. Hey, so why do I bring this up? Because we have no clue, no one does, what's going to happen at the macro level. All we can do is respond in a disciplined way to what's happening in front of us. So I'm going to throw this question out to you. When I say respond in a disciplined way, that's Irongate's methodology. Looking at this chart, what have we been doing for clients the last month, 2 months to take advantage of this opportunity?
Buying.
Mike, I say Mike goes there.
No, we've been buying. And I think that is a very interesting chart. Brian actually mentioned this as we were talking for a second before we started here. But two things. Number one, when you take a look at that green line, the way that's come down, what that would suggest is that, well, one of two things is happening here potentially. Either A, companies are expected next year to make a whole lot more money in tech and price hasn't changed. Or B, they're expected to make the same, maybe a little bit better, but price has come down a lot, right? And that's what we've seen. Prices have dropped a lot. And if you're following a plan, well, doesn't that mean that as long as the fundamentals, the competitive advantage, good management, it's all still there, you look for an opportunity to buy because you can't control price, right? But what you can do is be patient enough to wait for price to come to you. And that's a pretty good chart to reflect that. But on the other hand, too, another thing I kind of find interesting that Brian mentioned was that gold line, or the other line there, that's the S&P. What we've seen since, well, this entire decade, since 2020, is technology's really outperformed on this, forward PE basis. Been kind of expensive compared to the S&P. Now it's back to S&P levels. I think that's interesting. If we see that enthusiasm reignite for tech, I mean, it could be, could be room for that expansion a little bit from here. I don't know. What do you think?
I would say that as I look at that, and Mike, thanks for your take there. But as I look at that, I see that we're paying less today for the stream of cash flows that the businesses in information tech. We're paying less for those cash flows than, say, a few months ago. And that's a good thing. What that means is that our return on investment right now potentially is greater than it was say investing 3 months ago, or when prices, what you're paying for those cash flows was much higher. So this is why, I mean, this is our process. This is what we love. We were able to buy those same great businesses. There's, not every business in that index, but of course the businesses, there's several businesses we like in that index. We're paying generally less for those businesses and getting a greater return on our investment looking forward.
And Brett, I'll just throw in a little more of qualitative from those two and it's a recurring theme, but what have we been doing? Trying to sift through the noise versus the signal, right? There's been so much noise. Strait of Hormuz, Iran, Israel, just everything. And figuring out what really, really matters. And then focusing on that and staying disciplined to the approach that Mike and Brian just talked about, right? But it is, I think that is one of the probably most important things that we do on a regular basis, is just sift through noise and try to decide and talk with each other to figure out what actually matters and what doesn't. And most of the macro that you bring up, most of it doesn't matter. Sometimes it does, and it can impact stuff, but most of it doesn't matter on a micro basis to what we're doing business by business.
Yep. Love it. Love it. I mean, we're trading at levels going back, like what's changed in information technology, in technology as a whole since 2020? Like, think about what has changed.
I mean, AI is the big disruptor there, right? And what once was an AI boom in information technology, some stocks now have gotten absolutely hammered because the concern that they're going to get cannibalized and AI is going to take them out, right? So there's, even within information technology, and we did that whole podcast on the stack in AI, but there's so many layers to what that means and how it's impacting the different sectors within information technology.
Time will tell if what we did for clients over the last 2 months will pay off, especially, Mike, I think you and I have been buying like crazy because we're the ones doing the buying over the last 2 weeks. Time will tell if it'll pay off, but we've found deals that on the best companies in the world that we just haven't had since 2022 or 2020. So you can do two things during a market correction. You can freak out, sell, and get out because your neighbor scared you about something or the news or whatever it may be. Or you can take advantage of it and buy the best businesses in the world when they're on sale. That's your two choices.
And so, Brett, the problem with that first choice is you just then locked in a permanent loss of capital, most likely, when you do that.
Yep. And the emotions are high as you do it.
And then you probably don't like your neighbor very much after it recovers in 12 months, and you've ruined a relationship.
Dog going to yard and poop.
So try to give your neighbor a break, love your neighbor, and buy more.
We've been told by the big guy. Absolutely, brother. Absolutely. I'll add a third thing that you can do when the market's correcting, and that is trade options, which we've done a whole heck of a lot of this year as well. So there's the chart of the day. There's our macro take. Let's move to which I know you loved especially, Spencer.
It's good. It's very good.
I want to have a new title at Iron Gate called our macroeconomic
advisor. Tell me what you think about LA these days, huh? Latin America. Give me your run on Latin America, the BRICS, emerging. Can you tell me about natural gas prices in the Arctic?
Yeah, it's real good. It's real good. All right. Here's the next topic of the day, and that is something that I've actually, it's probably the question I've gotten the most. We have the best clients on the planet, and I have gotten very few concerned calls about the correction. Really, hardly any at all. I've had more calls about the SpaceX IPO coming out than I've had about being worried about the market correction or the war in Iran or anything. I know all of us have had those questions. And so what I want to do is I want to talk about the IPOs, especially the SpaceX IPO. It is on tap to be the biggest IPO in the history of the market, which is pretty crazy. So the three of you, I'm going to give you the reasons why we should buy SpaceX the minute it becomes public. Okay? And I'm taking.
Are you the good cop? You're the good cop and someone else is the bad cop?
You three are be the bad cop. I'm going to win because I'm the good cop. Here's why we need to buy SpaceX, all right? Which will come out sometime in June-ish or late summer with its IPO, $2 trillion company, which is crazy. Elon owns about 40% of the company. He controls in voting rights 75 to 80% of the company. So as a side note, it's profitable already, guys. We're talking 15 billion of revenue, 8 billion EBITDA. It's very rare that a company comes out public like this that's profitable. Most of them need the money they get from the IPO to become profitable. Here's the other things about SpaceX. It's comprised of three main companies, Starlink, and then you got the rockets, and then you have XAI. Remember, Elon rolled XAI and X, right? That's part of XAI, into SpaceX. Have you guys ever used Starlink?
Once.
Oh my gosh. I mean,
Yeah, I did.
It is the greatest invention ever. In fact, 60% plus margins on Starlink. It is where almost all the revenue from SpaceX coming on. They have 9 million subscribers. Unbelievable product. The rockets they shoot up into space, 1/20th. They can shoot a rock. I mean, we just had that Artemis go around the moon for the first time. And they do it for 1/20th the cost of NASA. I mean, you guys, SpaceX is amazing. Here's the biggest thing. Okay? Have you guys heard of orbital data centers? 3 companies in the world. Orbital data centers. That's a data center in space, which doesn't need energy because it has all the energy it needs. So, and cooling, right? Like data centers in space. 3 companies. SpaceX has these planned. Google or Alphabet has these planned. At Google, it's called Project Suncatcher, which is kind of interesting. And then NVIDIA has a Space One Vera that they're going to put in space. And so if that comes into fruition, this is going to be huge. Guys, tell me this. Would you buy the SpaceX IPO the day it becomes public? You guys are all on board. Brian.
I would say we follow our process and deter. I mean, I think all your case there for SpaceX is really strong, and I'm impressed of the information knowledge you have there. I think it is rare that an IPO, a lot of IPOs come out and they're not quite profitable, and that is somewhat rare. And I definitely have interest in SpaceX, and I think it's something we definitely should analyze and look at. But just because it's available doesn't necessarily mean it's a good opportunity or a good buy. In fact,
I don't understand that.
Well, a great business, a great investment, or just a great business is not necessarily a great investment, and it depends on what you pay for the business, what we pay for. And generally, IPOs historically have not been a great bargain, a great opportunity. Think about it. If you invested in SpaceX 20 years ago, you've been waiting for a liquidity event. Well, now the liquidity event is coming up, and you're anxious to sell. So there's going to be a lot of investors that have held SpaceX for the last 20 years, that want to sell. That might give us an opportunity when there's some selling pressure at some point down the road. And those investors, when it first comes out, there's a lockup period, typically 180 days, 6 months before they can actually sell their stock. Now, there's talk about SpaceX that they might do a little bit different deal where they might, in 30 days or 90 days, open up some shares for some sellers to sell. But that could be an opportunity for us if we're a little bit patient and wait for the price to be right, which is just our process. Wait for it to trade below intrinsic value. That's what I think. That would be my argument, Brett. I think the business sounds great. I plan on doing some heavy research into SpaceX, but yeah, that's what I would say.
So you wouldn't buy it out of the gate. You'd wait.
I wouldn't commit to buying it out of the gate right now. I definitely wouldn't commit, but it's something that we could consider.
Mike, Spencer, come on.
Facebook went down 50% post IPO. That's one that sticks out in my mind.
Yeah.
That was Facebook. And then granted, that was a different time. You make a very compelling case though, Brett. I mean, those were
it's what our clients are hearing, right?
There.
That's what our clients are hearing. And so one analyst said if these orbital data centers come into play, you're talking about a $10 trillion company, right? Which kind of goes into what Brian was saying. You don't have to buy it right now. If it's coming out at 2 trillion and it's going to become 10, just chill a little bit.
Yeah, it could be peak hype, for the whole thing as well. And I love what Brian said. You got to follow the process. Let's say it IPOs and doubles in value, right? After the IPO. It's a time that you want to beat yourself up. But, following the process is more valuable than, missing out on the first, week of pricing on an IPO, right? The process is the most important thing in my mind.
Price matters. And I think we should walk through our clients a little bit of IPO just to walk through that process of what it looks like to explain. Okay. So SpaceX is going to sell a certain number of shares that are not publicly traded, that are privately held. Okay. And so they've gone around, they've done the roadshow to investment banking firms and these large institutions who are going to lead the public offering. And they've stirred up the excitement and the attention. Sometimes that happens and there's not excitement or attention. And so they pull the IPO and they say, hey, there's not a market for this. There are commitments ahead of time of what those people that they've done their roadshow to, of what they're going to buy at a certain price, IPO price. That is before it starts trading publicly, right? So they do the valuation, they get an assessment of everything, and they say, hey, we're going to IPO. I'm just making this up. I have no idea. SpaceX is going to be IPO at $50 a share. That's based on a $2 trillion valuation, and we're issuing this number of shares, okay? You're not, based on our experience of IPOs, of hyped companies, it's going to IPO at 50, but the minute it starts trading on the stock exchange and opens, it could open at 51, it could open at 150. We've all seen companies IPO at a price, and when you actually can go on and buy it as a public, as just a guy investor, it's 80% higher or it's 200% higher. Or candidly, I've seen some, it's 20% lower, right? It pops up and then it drops down below. So price matters. And if you tell me that SpaceX drops 80% on the IPO, I'll probably go buy some. If you tell me that SpaceX doubles in the first 30 seconds of trading, I'm probably going to sit back and just let it and watch it for a second. Because what is one of our main rules, to quote a client? Don't chase a bus, don't chase a date, and don't chase a deal. It will come around and there will be an opportunity to do it. But a lot will depend. To me, price matters completely. What will it actually IPO at? And not the number you read on the article at CNBC, but when it actually starts trading on the exchange, what is that price? And that'll determine everything. And I can tell you, there's a 99% probability that it's going to be too expensive in the first 30 seconds of trading.
We looked at the PE on information technology and why we get excited when that PE is low. You're talking about the exact opposite, Spencer. You're talking about a PE that explodes on SpaceX.
Yeah,
and any IPO, right? You're going to have Anthropic probably this year. You're going to have OpenAI probably this year. Unbelievable companies. Price does matter where you buy it. Here's the problem where people get kind of messed up, and it's FOMO. It's the fear of missing out. How does one get over because I would bet that it has a chance to double in value within the first week of trading, then go down, because the euphoria is so high on this IPO. So how do people remove the FOMO, the fear of missing out, and don't chase it?
This is maybe a bad comparison, but back in 2022, a company called Rivian, which there was a lot of excitement about back in 2022.
I don't think it's a bad comparison. I'm not saying it's exactly the same scenario, and that's not going to happen, but that's a company that had a ton of hype behind it. Ton of hype.
Now, I think SpaceX has more. I think Rivian has substance to it. But the stock on the IPO, it traded up to $172.
Where did it open?
And today it's at $16. It's just been and so reality set in. And when you think about owning, say, SpaceX over the next decade, 5 or 10 years, there's probably going to be an opportunity for you to buy SpaceX at a reasonable price. Hopefully, we hope. But at some point, I think reality will set in, and hopefully there's an opportunity to buy SpaceX at an attractive price.
So FOMO.
Yeah.
Mike probably has a good answer, but I'm going to say this. I don't know if I believe this fully. I think one of the necessary attributes to not experience FOMO is being able to be happy for other people's success. I think that is a key element that helps fight off the feelings of FOMO. I'm not saying that's the only answer, but I really do think that when someone can just be happy for other people's success, FOMO becomes less of an influence in their lives. That's a little more ambiguous, but I believe that to be true. I'll let Follett go.
Yeah, FOMO, Mike.
I'd plug in the word.
I love your answer, by the way, Spencer.
Yeah, that's a great answer. Great comments. My only thing is I might plug in the word responsible for the success of somebody else. In a fiduciary relationship, that's what we are. We're responsible for other people's success. So that's a great thing to remember. Also, actually being a victim of FOMO, buying natural gas when it was at $7 back in, whenever it was 8 years ago, we called that the Widowmaker. You can lose a lot of money because of FOMO. You jump on just way too late.
Well, let's go Munger for a second. I'm going back to my thoughts on it.
You got a great Munger quote?
Well, what did Munger? Let's quiz Brian. Let's see if he knows this. Brian, what did Munger consider one of the deadly sins?
Envy.
Okay, first of all, Brian knows his Munger. That's exactly right. And envy also is one of the great motivators behind FOMO.
And Munger, Charlie says that's one of the most destructive attributes anybody can have is go through life with envy.
So if you attach the price you pay is so important, right? To envy, and you forget price and go on FOMO and envy, that's where the destruction of capital comes in. So for us, we're going to watch it, and hopefully we get an opportunity to buy it at some point if it matches our 4 criteria, the fourth of which is buy at a 20% discount to its intrinsic value.
Hey, can I throw in a Buffett idea here, since we're talking about Charlie.
Yeah.
Buffett always, and Brett, you know this, you're a baseball guy, but Buffett always talks, he makes the comparison in investing with baseball. And in baseball, you have 3 called strikes. But in investing, there's no called strikes. We can stand at the plate all day long and watch strikes, perfect strikes go by and by and by, and we're not penalized. And so we are not penalized if we don't swing at the IPO price on SpaceX, that we're not penalized. And we can wait for our pitch. And our pitch is when the price makes sense. That's our pitch. You say it's low and inside, or whatever, however you like your strike zone. And so I think that having that attitude is probably a healthy attitude.
Yep, love it. I will say this, for clients that have $1 million or more that are in our options trading, like, I'm excited. You'll probably have options trade on SpaceX. They usually come out, if it's a popular IPO, 1 to 5 days, somewhere in there. You'll probably have options trading on SpaceX within a day or two.
Can you imagine what the premium on that is going to be?
That's going to be, we're going to geek out to that for sure. So that's probably where clients will see the ticker symbol in their account, is when we trade options. But it could be, listen, it could be a SpaceX IPO. It could be Bitcoin. It could be anything, right? That FOMO is such a dangerous thing and can lead to the destruction of capital. So we will be careful and be a fiduciary, as Mike said. So IPOs, be patient. All right, last topic of the day, boys. Spencer sent me a great video the other day. It was a Bryson DeChambeau commercial where he's sitting there and there's aliens and talking about astronauts. I think he was making fun of me, is what he was doing. But it brought up the Kalshi poly market prediction markets.
Gambling.
And I didn't. What's that?
Nothing.
Okay,
nothing. Keep
Spencer,
going.
Explain what the prediction markets are.
Gambling.
Is that your definition for prediction markets? Like, what's a prediction market?
So prediction markets are online. I mean, it's gambling, right? You are betting on events, and they are taking probabilities of those events occurring. And so whether it be sports, whether it be geopolitical events, politics, entertainment, just anything, it is a market. I'll tell you what it is, okay? This is the best example I can give you. On my basketball team, my rookie year in Germany, we had a couple Eastern European dudes. One of the guys ended up going to jail in Germany for fixing soccer matches later in life.
Oh, wow.
And I could go probably 20 minutes on stories of him gambling on games, apparently, that I wasn't aware of. But anyway, we would fly into a place and we would be waiting for our luggage, and they would be betting €2, €5 of whose bag was going to come out first on the luggage carousel. And then if they were really bored after that, they would bet who's going to be the last baggage. In the sense, it allows you to place, they would call it a trade, but it really is making a bet of a certain event to take place. And that's what the prediction markets are.
So Mike, I love that story, by the way. It reminds me of a video that I saw about 2 dudes hanging around calling the gambling hotline and betting, was it going to be a boy's voice or a girl's voice that answers the gambling hotline, right? That's what that reminds me of. Mike, what's some examples of the prediction markets? You were telling us some a little bit earlier. Did you have some examples?
If you wanted to bet on a Democrat presidential nominee in 2028, you could. By the way, Gavin Newsom, 27% chance. But what's kind of wild about this It is kind of interesting, if you ask me, to keep your eye on just to see what people are thinking out there. But you don't own anything. Basically, investing or betting on just an outcome. And once that outcome is settled, right, everything's over. It's kind of an interesting contrast to buying stock. You could buy stock and actually own something, and as long as that
Yeah.
thing's, earning money, you could you can make unlimited amounts from that. But that's one of them. What was the one that I was looking
You
at?
had one about
Number of
Elon.
tweets.
Yeah.
How
Oh,
many
this is one.
tweets? Yeah.
Tweets from Elon. So, by the way, this bet finishes today, but between April 7th and April 14th, will Elon Musk post somewhere between 300 and 319 tweets? And right now, it's at a 1% chance.
So he's
So
under. Yeah.
if you want to bet on that,
the
you
volume, so the volume on that trade, $14 million is what I'm looking right here. There's been $14 million exchange hands on the volume on that trade.
So let's talk about money for a second. Okay. Prediction markets, they call it prediction markets. And I guess because it helps predict events, right? It got the election right. It gets a lot of things right.
So they call it prediction markets gambling. Yeah. They call it that because it's marketing, right? It's marketing, and it's a narrative. You can't call it gambling, or else it's subject to gambling legislation and regulation. And so obviously it's marketing. To call it a prediction market is an absolute genius marketing campaign.
So you've had it. So has that marketing work between 24 and 25? You had a 300% growth in Kalshi and Poly market, which are the two leading prediction markets, gambling markets. You have 5 to 5.5 billion every week gambled on. That's crazy. 80% of those bets are on sports. And month over month, short-term growth, you're seeing 35% growth in these markets, month over month. So what's the harm? What's the, why prediction markets, they're growing like crazy. I guess two questions would be, what's the difference between these prediction markets and what we do at IronGate in trading stocks and options? That's the first question. I'll stop there. Anyone want to fill that?
I mean, what we do is we're investing in a business, a real asset, and prediction market, you're just betting on an outcome. It's either yes you win, or no you lose. I mean, that's it. But we actually own assets, own a business, and you've said it, Brett, American ingenuity. American productivity. That's what we own. When you own a business, you own a stream of cash flows, future cash flows. With a prediction market, you're just betting on a certain outcome, and if you're wrong, you lose, and if you're right, you win.
Yep, you're buying a stream of earnings, right? In the options market, you trade options on those same stocks that you buy. And so if you end up owning one of those stocks, it's the same principle. There's an asset with a stream of earnings under that options trade, right? Which is, if I bet on Elon getting tweets,
what do you own?
Asset there. That's a straight gamble.
You don't own anything.
You don't own anything. But what's the harm in this market for people?
Oh,
Spencer, do I need to put? Did I just put a quarter in you just now?
I'll go. First of all, let's go micro, and let's just go the individual retail person. Okay. There's an addictive behavior to it, right? Honestly, if you look at all the studies right now, men in America between 15 and 30 are becoming addicted to so many different things. And this is one of them, right? Online gambling, online prediction markets. It's taking their attention, their motivation, all of those things, their drive from becoming contributing members of society. But let's just go from what is the harm to the retail trader? First of all, misinformation, lack of information, and manipulation, right? There are market makers out there that are just trying to make money and get people to place bets on things that maybe they don't know about or they think they know, and they don't have access to all the information, right? Publicly traded companies, yeah, there's stuff, right? There's obviously stuff, but there's at least some regulation that they have to disclose their financials every quarter, every year, all of these types of things. So you have unequal playing grounds for everyone involved. That's the first. I think another huge thing is the opportunities. Let's go two sides, just the human condition. First of all, it dehumanizes and monetizes everything. To where it no longer, it's all profit motive. And what I mean by that is assassination. I mean, they're betting on assassination attempts, betting on Maduro's, right? Maduro getting taken as a leader. And there's some really unusual trading activity around these events. So there are people profiting from information off of those that don't have that information. And so I think there's the dehumanization of the entire world by turning everything into just money. And then the second side is the amount of corruption because of the new industry and the lack of regulation, the amount of corruption. If we're talking about political campaigns or geopolitical events or whatever, what's to say that people are not going to place it? Well, it's happening in some form or fashion. Place enormous trades or bets and then push that as an agenda through lobbying, through whatever, to not only have that take place, but to financially benefit from that. And then you're taking away sound judgment, honesty, integrity of the entire system, which we all know there's a lack of trust in public institutions as a whole and in media. This only amplifies it and makes it even crazier. So that's my soapbox, but yeah, I think it's a huge negative cost.
It's insider trading.
Yeah.
Yep. Yeah. Which, if you're trying to make money off of people that have inside information, yeah, good luck. Good luck with that. Mike, who's the real winner of these prediction markets from Spencer mentioned market makers, right? And let's call them bookies here. They're the real winners. Explain why, Mike.
Yeah, they really are. And from just a practical point of view, if you're thinking about it as from an investment point of view, you've got a negative expected value, right? They're designed over time to make the people who come to that sports book or go to that website lose money, right? So who makes the money? Well, I guess you could say the easiest money in that business are the people who are just taking the bets, right? So for example, if I wanted to bet on Elon's tweet count, I might, in any given time, I might have to pay $70 to buy that, right? But then if I wanted to sell that bet immediately just to get out, I might only be able to sell that for maybe $50. So just the transaction, being able to get in versus out of that bet, because these are exchanges, you can buy and sell them. That turn is going to cost a significant amount of money. So where does that go? Right? It goes to the bookie or the website, whoever is hosting that particular game. So it's a fascinating market, but over time, users aren't designed to win, right? You're designed to, by design, you're going to lose basically over time. Even if you do win a few times, you're kind of reinforcing the wrong behavior, right? It's like that. You get a reinforcement of really negative, behaviors, and you tend to do it over and over again if you get caught in it.
Who are the real rich people in Vegas? It's the house money. It's the big casinos. They're taking a cut, and it's the same thing here with these bookies.
We talk about being a wise steward over our clients' money, right? Fiduciary. People need to ask themselves if they're involved in this market, and we're not here to tell you what to do. You have your own free will and agency, but are you a wise steward over your own money, right? So the prediction markets, growing like crazy in popularity and in money flow. And the bookies are getting rich. And these companies are too. But ask yourself the question, am I a wise steward over my own money? And that should probably be your answer to you. So any final thoughts, my friends, before we wrap up for today? We've covered some thick topics.
Got a little philosophical. We
Oh.
quoted Munger.
I'm a good Munger quoter.
Yeah, it was good. Great day today. Thanks, Brett.
Thanks for
Yeah,
being
thanks.
our what would you call a philosopher? Thanks for being our philosopher, Spencer. We appreciate it, and welcome home, guys. It's been fun. Thanks for taking the time. Hope everybody enjoyed this and learned something from it. Until next time, my friends. Bye now.